Good morning, good afternoon, good evening, and welcome to The Nest. It's September 10th, 2020, and we're streaming live with participants from Asia, Africa, Europe, and around the world. For those of you joining us for the first time, I'm Kian Kasseri, I'll be your host today. And our goal here on The Nest is to connect entrepreneurs in frontier markets with angel investors worldwide. We stream live every Thursday via Zoom, and all episodes are recorded and available on our website, findthenest.org. So today we have two exciting companies, both focused on the Nigerian market. The first one is standardizing APIs to access financial services, and the second one is tackling last mile delivery. We'll hear all about them in a second, but before that, let me introduce our partners and co-hosts for this week, TechPoint Africa and The Flip. Adewale, are you here? Thanks for hosting The Nest with us today. Would you like to kick it off with an intro about TechPoint?
Yeah, thank you for partnering with us to join this. It's really nice, amazing stuff you're doing for the continent. And my name is Adewale Yusuf. I'm the publisher and the founder of TechPoint Africa. We are a Pan-African media company that focuses on technology, startup, and entrepreneurship on the continent. We follow the dealings from startup to the investor relation to fundraising and some of the activities, even the government and policy as well. And beyond the publication, TechPoint.Africa, our publication, we have intelligence.techpoint.Africa, a platform where we have big data, where we work on data, on African data, and get meaningful and interesting data for you to make meaningful decisions on your startup or your investment on the continent. And we work with different partners beyond, we work with different partners like Crunchbase, we have Statista, some of these big data partners from around the world, and some from Japan, from China, from France, and from other parts. So we are really happy to be part of this. Thank you for the opportunity to be part of this. We believe that this is one of the, as it is an untapped opportunity, and I'm happy that for the team putting this together. Thank you so much.
Thanks, Adewale, and thank you again, TechPoint, for partnering with us. Now, moving on to our second partner and co-host, The Flip. Justin, would you like to briefly introduce your company?
Yeah, sure. So thanks so much for allowing me to be a part of this and to co-host it. My name is Justin Norman. I'm the founder and the host of a podcast called The Flip. The Flip explores contextually relevant insights from entrepreneurs changing the status quo in Africa. We actually publish Thursday mornings as well, just like The Nest, or I guess Thursday afternoons for me here in South Africa. But we published this morning as well. So if you haven't checked it out, please go do so. It's on the future of mobile financial services. I talked to people at Orange Money, M-Pesa, PalmPay, and a few others. Yeah, and you know, I'm a fan of The Nest. I've been watching what's happening from a distance. A big question that I have as somebody who's working in this ecosystem as well is how we can compel interest and intrigue in what's happening on the ground, how we can convert that into action. And I think that this platform is one of the really cool ways that's happening. So I'm glad to be a part of it. Thanks for having me.
Excellent. Thank you, Justin. Thank you for the kind words. So now moving on to some announcements. For the next episode, we'll be hosting the next Francophone. And then on September 24th, we will have our second Nestcast live. If you are unable to join us a couple of weeks ago for our first episode of Nestcast Live, the quick intro is that every month on Thursdays, we have an open dialogue about the topic relevant to investing and entrepreneurship in emerging markets. We hear firsthand from those who are investing and innovating in the global south. We hope to provide a platform to their voices and experiences so that we all benefit. Last time, the topic was about race and entrepreneurship. And on the 24th of September, we will bring a few panelists to explore the question of whether venture capital is the right model for Africa. So join us at the same time, same place on Zoom. And now let's get started with the show. For those of you in the audience, we want to hear from you as well. This is an interactive session, and we kept the Zoom open on purpose. So please interact with us, tell us who you are, what are you working for, where are you from, and how did you hear about the Nest, which companies do you like? And feel free to answer the poll right now popping up on your Zoom window. Now, let's introduce our angels, Jake, Aaron, Raj. The floor is yours.
Okay, since I'll go first since my mic was off. So my name is Raj. My day job is I'm a lawyer at international law firm Denton's. My part-time side hustle gig, whatever you want to call it. I'm an angel investor. I'm involved in a couple of funds. Launch Africa is one. Aaron is another one that I'm supporting. Aaron is starting a fund called Sherpa, which I'm sure he'll tell you a bit more about. Passionate about. I'm Malaysian, so what's a Malaysian doing in Africa? No idea. I fell into it about 25 years ago. Just fell in love with it, and I'm glad to be here. And I think just to reiterate what someone was saying the other day, I think this whole the Nest and everything has happened since Jim started it. It's been a wonderful experience and exposure for, I think, a market that's not very well understood. So hopefully we'll do more of that. And yeah, over to you guys.
Thank you, Raj.
Yeah, Raj, I can continue the Southeast Asian team. So like we have a Malaysian and we have a Singaporean in Africa as well. So clearly Africa is the place to be for all that Southeast Asia. So my name's Aaron, and like Raj, like my day job is head of growth at the Catalyst Fund, and Catalyst Fund backs fintech entrepreneurs across Mexico, Africa, and India. And so very much have Africa sort of front and center for us. We back entrepreneurs through a package of $100,000 in grant capital, as well as $150,000 in venture building support. And some of the companies that you might know of are Chipper Cash, Soko Watch. Our portfolio has gone on to raise more than $77 million since we began. And we focus on financial services, but have a pretty broad interpretation of what that is. And obviously, I guess in the past, I also like to say that my side gigs are, I'm also co-founder of Venture for Africa, which is a fellowship program to help people gain access to interesting jobs in product operations, finance, and tech in startups in Africa, as well as launching a new fund soon together with Raj's support too, which will be announced shortly. But yeah, thanks for having me here, and yeah, always great to support.
Excellent, Aaron. Jake?
Yeah. Well, I guess we have the whole Pacific Rim. I was born in Alaska, so we have Malaysia, Singapore, and Alaska. I don't know what we're doing here, but yeah, so I manage the DFS lab, and we're an early stage investor and accelerator program for African startups. We focus on fintech and broader digital economy. So we've started really kind of narrowly in fintech and have moved a good bit beyond it. We see ourselves, our thesis in terms of investment thesis, we really like to see stuff that's really solving problems that are really relevant in Africa. We like stuff that's focused on infrastructure, bringing people and economic processes from offline to online, and in particular stuff that helps people improve their income. So finding work, selling things, growing their business, etc. We think of ourselves in terms of the sort of the perspective we bring as almost a bridge between markets and between worlds. So we do a lot of work actually doing investor tours and doing research in Asia, in some of the markets out there, Indonesia, China, India, and try to bring a lot of that understanding back to inform the companies that we work with in Africa. So how can they learn from some of the markets that are a little bit more advanced, or some of the models that are out there? Our process, we write really early stage checks, and we like to think that we're giving some of the better value in terms of both valuation and the support that goes along with it to companies that are at a pre-seed stage. So even before you raise the seed round. And we, what we look for, probably on some level, same as everybody else, we want amazing teams, we want big market opportunities, and we want the right approach. That's where we get. That's where we start, and then of course within that we look for that special thing that breaks the mold of the normal rubric and tells us that this is the one. Well, I personally worry a lot about TAM, which is what I use as shorthand for market opportunity size. And in Africa, I just see so many things that look good at first, but then you run into the boundaries of what's the percentage of the population that really makes enough money to actually consume that service. And you see a lot of things I think get imported into Africa from elsewhere that work based on an assumption that there's 10 times more people making that number or that amount of money. And so we really try to think hard about that kind of stuff and work with our founders to figure out the right approach that's going to really create value for people at a lower level of income potentially. And we spend a lot of time. We work with our founders. Like I said, we're think of ourselves as an accelerator. So we spend a lot of time working with our founders to build their business and to raise money. And we figure we're the first check-in, but we're certainly not the last. They need a lot more capital after us. And so we spend a lot of our time raising money. And that aspect of being an international bridge, as I said, we try to build a lot of relationships in the Valley, in Europe, where I'm based, in Asia, elsewhere. And a lot of those relationships bring advice and help, but critically, and as I think a lot of entrepreneurs get tired of advice and help, you actually want money too. So that's a lot of what we do, is try to help our companies raise their next round and make sure they get the money they need. So that's us. We worked with about 12 companies, 13 so far. We've got a round open right now. So if anybody out there is listening, it's not going to be open much longer. Go and apply. It's on our website, dfslab.net. And that's basically.
Thank you, Jake, and thanks, Aaron and Raj, for your continuous support. I know it's not your first time being investor on the show. So let's move on now to our entrepreneurs. It's time for pitches. Each one of you will have exactly 5 minutes to present. We have a timekeeper, and he will stop you at exactly 5 minutes. So please keep it short. And then we'll have around 15 minutes for Q&A with our investors, and the audience can also vote on the poll. As you can see, the result of the first poll, it looks like we have a huge audience for Africa, but also from Europe and North America. All right, Romain, the counter will start exactly when you start speaking. So good luck, you have 5 minutes.
Okay, thank you so much for the opportunity to pitch to you guys. I'm the founder and CEO of Kwik Delivery Technologies. Our trading name is Kwik Delivery, and we see ourselves as an enabler, a builder of e-commerce infrastructure and services for African merchants in the fields of delivery, fulfillment, and payment. We've been founded in July 2018. We are a B2B centric company, and we have over 20,000 B2B users today on our first vertical, which is a last mile delivery platform in Lagos, Nigeria. Basically, the first vertical is a very simple service, but very useful to many merchants. We have a fleet of bikes in the same model as Uber. So we are an asset-light company, and we deliver anything on a bike in less than 2 hours for merchants around Lagos State. And we're expanding to new cities very soon. We have made a seed round last year of a bit less than $500,000. And now we're raising $2 million in order to develop new verticals, some new locations, and to keep improving our technology and acquiring some users. So just a few basic facts that I mentioned. We grew at 25% a month, and we have a very strong recurrent customers base. And we are on target to get 100,000 B2B users by the end of the year, subject to financing, of course. This is roughly our strategic positioning. As I said, we strongly believe that for e-commerce and commerce to grow in Africa, in African cities, any operator needs to solve those three problems: last mile delivery, payment, and fulfillment. The way we do it is, our approach is that first, we rely on software platforms. Our first service is pure software, as I mentioned. It's a last mile delivery platform. It's been named Best Last Mile Delivery Service after 12 months of operations by Pulse.ng in Nigeria, a well-respected website. We are expanding to utility vehicles and trucks soon, this month, to expand our offer and become a full stack last mile delivery platform. There is a little typo. That's 100,000 B2B users on target for December 2020 and 3 other Nigerian cities. So it's a very classic but very needed, much needed service in Lagos, and it's growing very fast. The second vertical is called Kwik Pay, and it's totally different from what other fintech companies are doing. We are very much in admiration of what other fintechs are doing to transition Africa to digital payments, but we think it's going to take a long time. And in the meantime, in the next decade, there is a need for a reliable operator to collect and manage cash payments. And because we have a fleet of trusted people, we believe we are the right ones to do that. And it's a strong enabler for e-commerce in Africa. If you can't collect cash for the next 10 years, unfortunately, you're going to restrict your market. And we have developed a platform fully integrated with banking partners in Nigeria, with cash insurance and strong processes in order to collect cash and enable e-commerce companies to benefit from the full market. As I think as someone said today, 5 minutes ago, you can't allow yourself to cut yourself from the customer base that is cash rich and that can use your service in Africa, because it's not such a user base in the first place. Then the third corner is fulfillment and storage, and we're going to launch our Airbnb for warehousing very soon, and I will be able to answer questions on that. Lastly, we are fully integrating Kwik with e-commerce platforms such as Magento, PrestaShop, WooCommerce, and Shopify, and we are going to release plugins for those platforms very soon. We're going to diversify our revenue stream very soon. We're in process of doing that. I will answer questions if there are any. We already have very prominent customers, this is the way we're going to use the proceeds for the capital raise we're doing at the moment. Thank you very much. I think I used my time, right?
Right on time. Thank you, Romain. Excellent pitch, and looks like a promising business. So our investors, what do you think? Do you have questions? Any further details you want Romain to explain? Please go ahead.
Thanks, Romain, for a great pitch. I would love if you could dive a little bit more into your key customers right now, and sort of like, you know, how often are they coming back to you? What are its typical order sizes and things like that?
Maybe just to add on, maybe because it's the same question I had, is what's your route to acquire customers? What's the cost of acquiring customers? What's your route of acquiring customers?
Yeah, sure. So I didn't mention our team, but we have a very, very strong team. So I take advantage of the time to show them. Your question is very important. Average delivery fee is between $3.5 and $4, which is very high. But Lagos is a huge city, and I'm sure Ope, we can vouch to that. There is a lot of traffic, and Lagos traffic time is as great as the potential of the state. So you can, and the potential is huge. so that's for the question. It's important to note that most of our, 5 to 10% of our customers are are ordering several times a day. It sounds optimistic, but actually it's the truth. Typical products we are distributing, we are delivering right now is air extensions. Ope, you're not using them, obviously, me neither. But
Mama, your screen stopped sharing. Can you get back to sharing?
Yeah. Okay, that's weird. Sorry. Okay, apologies for that. Is it good?
Yeah.
Yeah.
Okay, so To be analytical, 55% of our recurring customers who come every day, they are small and medium-sized merchants. Okay, shoes, food, hair extensions, legal contracts, chicken, of course, with rice, mechanical parts. We have a lot of small, medium-sized shops that use our service and didn't have the means to have a dedicated fleet before. And because we have no barrier to entry to use our service, and it's free to get in, and there is no commitment, they love it because they can use it on demand. This is the key factor for them. It's prepaid. There is no credit risk for us. We do collection of cash starting this month, which is important tool as well. And it means that small, medium-sized merchants can deliver wine. We do a lot of medicines. We work for, they are not small companies, but we work for every single pharmacy chain in Lagos. To distribute, and it's very interesting. We deliver from the wholesaler to the pharmacy. We deliver from the pharmacy to the customer. We deliver from the pharmacies to each other because they need to exchange inventory to have a flexible inventory. We're putting together a tool for flexible inventory management for merchants in Lagos, be it for pharmaceuticals, mobile phones, any type of products that are in high demand and that needs to shift around a location where you have several branches. I'm sure we can all relate to such use cases. So this is the kind of software solutions that we provide, and the enabling tool is the fleet that we master and that we are very proud of that brings the products around. So 55% is small, medium-sized merchants. 10% is large corporate accounts. We deliver for Health Plus, Med Plus, MedSaf, Alpha Pharmacy, CFAO, and so on and so on. We work for most of the pharmaceutical guys, as I said, and we're going after each sector in the same fashion.
And what's the cost, Romain, of cost of acquiring a customer, and how do you acquire customers?
So most of those small and medium-sized, well, sorry, Aaron, I missed this one, my bad. Most of the small and medium-sized customers we recruit through Instagram and Facebook, and it's working very, very well. So the cost is roughly $4 to $5.
And then the larger customers?
Excuse me?
The larger customers? The
largest customer, I would like to give you a kind of pitch answer, but it will be a bit hypocritical from me because some customers take 12 months and some customers take like 1 hour. Large corporate accounts. So I really don't know. There is no single answer. I don't have the distance yet to measure that at this stage. We have a dedicated team of 2 people for large corporate accounts opening, and we go after them, and I go after them myself every day, of course. There is no easy way to quantify that at the moment, but we don't spend money for them. We go after them. We use networks. We go out there in Lagos.
Yeah. Maybe going a little bit deeper on that, like how have been your efforts to deepen your relationship with each one of these larger providers? So like, do you have a sense of like what your share of wallet for them is? Like, are you taking 10% of their deliveries, 20% of their deliveries? Like how deep have you gone with them?
Well, for MedSaf, Health Plus, Med Plus, Alpha Pharmacy, we do 100%.
Nice.
Okay, we saw CFAO 100% for motorbike spare parts, and a lot of custom Givaudan. We deliver flavor samples around the city to industrial clients, 100%. We take over people who had either their own fleet and they want to get rid of their own fleet because it's a mess to manage. They are poorly incentivized, and so a huge influx of customers are people that want to externalize, especially now that these are tough economic times, and people want to rationalize their business. And that's what we allow them to do with transparency, efficiency, accountability, and so on, and flexibility. Very important flexibility. And then we have also the people who are using DHL Okay, I don't know if you have people around you who've been using DHL to deliver from Lagos to Lagos, which is a bit insane, but that's the state of the market in Lagos because there is no postal service. Sometimes you have to use DHL or UPS to deliver inside the city, and we do the same thing as DHL, but we do it for 2,000 to 3,000 naira. DHL is going to do it for 10,000 naira. It's going to take 12 hours. They're going to go through the warehouse, and then the next day they will deliver. We do it in 2 hours for a third of the cost.
So you have these big customers, and you have lots of little ones. Which one do you think is your main path to growth going forward? And what are kind of the key differences between the kind of service you need to build for the big guys versus the little guys?
Well, I mean, the key to this business is volume, of course. So it's a bit of both. We need the large corporate accounts. We're going to have a huge swath of recurring orders every day. But at the same time, the richness of Nigeria is also the 40 million registered companies that are trading on a daily basis between each other and to the population as well. And from the big guys to the medium-sized guys. And so we want to be on every part of the chain, and we need all of them to grow. But of course, the large corporate customers, I forgot to mention our friends at SPAR. When COVID and lockdown came to Lagos, in 10 days, we put together with SPAR essential products delivery service, and we delivered to hundreds of thousands of items in Lagos during the lockdown, like this, and we helped accelerate the digital transformation of retail in Nigeria because of this, and we know that Lagos and African cities, as a result of COVID, are going to do their digital transformation at a very accelerated rhythm, and we all participate in that. Ope, me, and everybody's pitching for you. In the past and in the future, we are able to transform the economies of these countries in a very significant manner.
Yeah.
Roma, sorry.
No, because there is the question that keeps coming back in the audience. Just want to share it with you, Roma. It's like about the insurance on the packages, and how do you ensure the safety of the packages? Did you partner with an insurance company, or how do you do that?
I want to apologize because I'm looking at myself on the screen. I had no idea I look so fat on TV.
Relax, Roma, relax.
It's terrible.
You look very good.
Dad, if you look at me, I'm sorry. Okay, your question was related to, sorry?
Insurance
on especially on valuable packages.
Well, I need to tell you that we delivered 100,000 packages in the past year, maybe more than that, and we had 3 insurance claims. And I don't think my great partners of ARC Insurance is in the audience, but if they were there, they would vouch for the fact that we had 3 claims in over 12 months, and thousands of packages delivered. And they were not theft, they were accidents. There was a pack of strawberries at 10,000 naira, very expensive strawberries, and they were crushed. I swear to you, it's true. I have the claim sheet for those who want to see it. Of course, if you want to have strawberries delivered, well, you're taking some risk, okay? Then we had food items like a cake and something else. So three claims in over a year. So we have a great insurance partner. We have goods in transit insurance, 200 million naira. 100 million naira a year. 200,000 naira per incident, and we have cash in transit insurance as well.
And how do you secure the cash?
Well, we do it totally differently from everybody else. We don't do it ourselves. The riders don't bring the cash to us because we have our value is software. Our value is not handling swath of nairas and reconcile them every day. We have partners which are banks, and they do that. Is their job for a living. They do that for a living. I don't have any added value gathering cash centrally at my location. So the riders, we have integrated our systems with the banks, and the riders bring cash to the banks. Because they have a unique ID, the bank teller already knows how much the rider needs to collect, to bring, sorry, and how much they need to collect from the rider. So
Okay.
it's an all or nothing thing, so there is no discussion. And everything, all the material aspect of cash is handled by the bank for a small fee, and I charge for the service and the software that put it together.
So the software, so the software tells the bank how much it's going to get, and the rider comes and delivers that amount precisely. Is that right?
Yes. Yes.
Okay. Okay. And
we look at the best practice for cash collection all around the world, and we came to the conclusion that we didn't have any added value to handle cash ourselves. There is no point. We should focus on what we do best. Each of the actors in the chain should do what it does best. The rider does best to take the cash and bring it to the shortest possible distance, and take the shortest possible times to remit it, because he is busy delivering stuff. He shouldn't take much time to do it. The bank is the best at managing cash and reconciling it, and we are the best at putting a system that brings everybody together and make it accountable and marketing.
Got it. Romain, can you just help me with a couple of things on two things. One is cost of delivery, and second is competition. And I want you to give me those in the following context. Competition today and competition going forwards, because I can see that something like this will very soon become, and I'm seeing this in other countries already, where logistics is just right for people coming to the market because there's such a big problem delivering logistics. So could you just help me with those two things, the cost today and competition today and tomorrow?
Well, the cost is really customer acquisition cost, really, because it's such a.
No, what's the cost of delivery? If I want to deliver something in Lagos, an average package, right, in Lagos?
Well, our rate is based on distance.
Okay.
And basically, I don't know if you know Lagos, but if you want to deliver inside Victoria Island, that will be between 500 and 800 naira, depending what you carry, what you want us to carry. And then if you want to deliver to have something delivered from Victoria Island to the mainland, it can go to 1,000, 2,000, depending where you are. Okay.
Right. Thank you.
That includes insurance, and we do it in less than 2. We have service level agreements for most customers that are regular, and so we deliver within 2 hours.
All right, thank you, Romain. So now it's time for our investors to give their honest feedback about whether or not they're considering an investment in Kwik.
Okay.
They want to move into deeper due diligence. So Aaron, Jake, Raj, what do you think of Kwik, and are you interested into investing?
Jake, looks like you got.
Yeah, I can go first.
Yeah.
So you guys have included, something pretty impressive. I think the growth that you've had and the customer uptake numbers, and the fact that you're, sort of getting repeat business, multiple times a day and that kind of thing. And also the ability, we didn't get into it. I still don't quite understand like how you manage both, big customers and small customers, and also packages that are, small, dry, easy to carry things, and then strawberries. I mean, those are very different things. And I trust you that you do manage it. We didn't get into it, but that's impressive. And also that you've managed the cash problem, which is another, obviously big one. So, I'd have more questions before I'd be willing to invest on kind of your long run scale abilities and getting out of Lagos, where like moving to new cities, new countries. That's always a bigger challenge than people think. But yeah, what I saw up front seems pretty interesting.
I can go next. Aaron, or do you want to go?
No, go ahead.
Look, I like the space. I think logistics, last mile delivery is a great space. And, you know, having been to Lagos lots of times, I know how difficult it is to move things around. And, you know, moving people is difficult, and therefore moving goods is just as difficult. A few things I think I want to sort of delve a little bit more deeper into it is what is the competition? You know, where's the competition going?
I apologize. I didn't answer at this point.
No, yeah, and I, well, fine, but it's okay. I mean, I'm not sure whether now we have the time or not, but I'd like to understand that a little bit better. Also, like to understand some of the things that Jake mentioned. But one thing, can you just help me on your current valuation and your current ask? I mean, it's a big round, I think, for what you're trying to do, right? I mean, it's a $2 million you're trying to raise.
Yeah, it's a big round. I agree. It's more like a hard cap. It's very likely because of the current context, and because also we need to move forward, and we already have large commitments at this time for approximately 700,000. The key is speed of quality and speed of execution. So we want to move forward as soon as possible. The current valuation is a bit below $3.5 million. Okay. All right.
And you've got 700 committed, and what is it? Is it it's not a price round, right? It's a what? It's a note, or what is it?
No, it's a capital increase. It's a capital raise.
Yeah, but is it a price round, or is it a safe note?
Yeah, it is a price round. Yeah, it's not a note.
What's the price?
What's the price?
We can go in the we can discuss that. Yes. In a more private circle.
Yeah, I think it's difficult to ask people to give them a commitment of funding if you don't know what the price is, right? But anyway,
no, I know you're not going to. I know you're all savvy investors, and you're not going to commit after a 15-minute speech.
Yeah.
Right.
Yeah. No, fair enough. Fair enough.
Yeah.
Fair enough.
Roman, first of all, you don't look large at all on screen. Don't worry about it. You look great, and you come across fantastic. So like first of all, like really impressed at the traction so far. I think you've certainly like scored a lot of like, you know, really good brand names out there, and I think the 100% deliveries was very impressive. They clearly trust you a lot.
We're very proud of that. Yes.
Yeah, I think with a lot of these businesses, I wonder a lot about what the next wave of these big names will look like, right? Because I think as with all entrepreneurs, like, you know, whether or not that's your investors or your customers, you go across like the lowest hanging fruit first, and these are already in there. So the question I would really want to see is like, what happens next, right? Who are the next names that your team members are able to go get? Like, I'm quite curious about that. And
I'm sorry to cut you short. I can answer that right away, actually.
Yeah, we don't have enough.
Yeah, I don't know how much time we have for that, but yeah, I mean, really impressive. The space we really like. There's a very clear need. I also have probably another concern around sort of like, you know, ability to ensure, I guess, safety, quality of each experience. You relying so much on sort of these third parties and not sort of like running your own fleet, and how much sort of control you have over that quality. Because I think at some point that will also come to bear, but I'm sure you have a mechanism to deal with that. So overall, I think it's a space we really like. Would love a follow-up conversation for sure. And obviously, as Raj mentioned, if the price is right.
Yeah, absolutely. Very briefly, if I may, I can tell you that we have over 40 API integration with large customers ongoing.
Okay.
Incredible.
Okay.
Yeah, I mean,
when I mean large, I mean very large.
Nice, no doubt.
It's not just large.
I promise it's my job to do the introductions right after the show so that you can take this conversation offline. But this was a very good first interaction. So thanks, Romain. Thank you, investors. Let's see the results of the poll from the audience on the backstage. Yes, here we go. Okay, it seems like we have significant interest from the audience as well. So yeah, anyone who wants to reach out to Romain, we've shared his contacts on the chat. I mean, his Twitter, not his personal contacts. Feel free to reach out to him directly or reach out to us, and we'll make an intro to Romain. Now let's move to our second entrepreneur, Ope, who will be pitching OnePipe.
Sorry, Kian, just
Okay.
before I go, just quickly, Roman, yeah, I'd like to have that conversation separately. And anyone who's interested, who wants to join that conversation, it probably makes more sense for us to have, if everyone's okay, to have one conversation rather than 5 different conversations. So I'm happy to do that.
And it won't give me the opportunity to say something different to each of you. So that's good.
Sweet. So we're sharing our email address in the chat box. If any investor is interested, I will make sure to put you all into one group so that we can create a syndicate for that. Thanks again. Let's move to our second entrepreneur. Ope, are you here? Are you ready?
Yes, I'm here, and I hope I
can. Please share your screen? So again, you have exactly 5 minutes, and the timer will start as soon as you start speaking. Good luck.
Please let me know once I'm visible.
Yeah, we're good.
Okay, so we all saw this piece of news and we were excited and we all went, yay, one for the fintech community. Plaid gets acquired. Now we are on a mission to create what is Plaid plus AWS for financial services, all rolled into one API gateway that has all financial services linked together under a common standard, starting from Nigeria, then to the world. And arguably, Nigeria has a very large market, potentially the largest market for digital financial services in Africa, depending on who you choose to believe. Despite all of the effort everyone has put in, only 10% coverage is what we still have in financial services coverage from a digital perspective. And many of the companies that you know in this list that have attempted to solve this problem in one way, shape, or form, as a payment network, as an agent network, as a credit company, all have a particular thing that they must do. They must integrate to companies that are typically larger than them, companies that are typically slower than them, further along than them, and it's a pain and an annoyance for most people. Everybody spends their time pawing the streets of Lagos looking for just the right API to do what they want to do. A little bit about me. You probably know of this product. We can debate it forever. Some of us believe that this product started this entire movement for fintech in Nigeria. This product was my life for 11 years. From code on my laptop to a business that we ran for about 7 or 8 years to pursuing M&A opportunities for it. This product was my life at some point. So I saw this particular problem firsthand. The good part is that I have now been joined by a team of really good and committed people. A lot of times I worry why they stay with me. I don't know why, but they're still here. Let's see how that goes. Oops. Aha. Luckily for us, we're also backed by this team of really good people. I don't know why some of the images are not showing, forgive me for that. We already have a number of investors with us now that are helping us along. Yes, so with OnePipe, we created one gateway that pulls together all of the APIs for financial services from multiple sources and puts an open and simple standard on top of it, from both onboarding to usage, one API that does everything. So whether you're trying to find APIs for managing completely bank accounts, open accounts, credit it, debit it, etc., whether you're trying to do KYC verification, push loans, disbursements, you will find APIs for this on OnePipe. And if you're a bank, if what you're trying to do is launch your own nice payment experience that looks like Paystack, feels like Rave, it's okay. You can have your own branded payment gateway from OnePipe. And if you are trying to offer credit to a captive customer audience without taking the risk, you will find APIs from some of our partners to achieve even that without taking the risk by yourselves. These integrations don't stop. They are still ongoing. We keep adding more to them. In fact, for some banks, we help them develop complete banking as a service stack for their business. We already have customers. The customers are growing with us, and clearly that leads to growth for us too as a business. We're growing about 20% month on month now. We've processed 1.3 million transactions, about $8 million in value, and we have 30 plus customers and counting now. So just to recap, OnePipe is in the center. We have multiple suppliers of APIs on the right-hand side, offering whatever it is they choose to offer, and the demand side is on the left-hand side. No matter the service you're trying to call, it will always be the same interface. How do we make money? The supply side charges a fee and we take a cut of that fee. Very simple and straightforward. This one comes up a lot. Who are our competitors? People keep calling out names. We just want to make it rain for everyone. We just want you to have one simple integration. In fact, to stress that at the moment we're integrating with Mono. We think we're on a journey that is very clear to us. We think we have not missed a step since we have been on that journey, just a year now, but we have not missed a step and we're on course to do what we need to do. The next step of our journey, let's skip that. At the moment, we're fundraising as part of the Techstars program that we're in. We're trying to top up that round to, we're raising 350K. The round is more or less closed with soft commitments. And what we hope to take out of this meeting is to convert those soft commitments and force it into becoming cash in the bank. I hope this is just right on time. I'm happy to take questions.
Yeah, right on time. Thank you so much, Ope, and great job on the pitch. So please, to our investors, Jake, Aaron, Raj, do you have any questions?
Hit me.
That's the spirit.
Turn off. Ope, thanks very much. I know of you before today, so nothing that you said has surprised me, yes, because my good friend Falabi has told me about you, and also Zach has told me about you, so I've been following your progress for a while. Like what you've done, I like what it is. Can I just ask a couple of questions before I hand it over to the others? One is, how do you actually go and how do you get your customers, right? How difficult is it to get your customers? Both, you know, if you look at one side of the coin, the supply side, the banks, how difficult is that? And what does that involve? And then on the demand side, I guess demand side is easier, but supply side seems to me to be the bigger challenge, number one. And number two, what's the cost then, and how do you see that growing? And do you see what are the challenges on that front?
So yeah, thank you. You are absolutely correct. The supply side is the hardest part. There's a bank I cannot name that we've been at for almost 2 years. Maybe tomorrow it will be done, right? And there are also other banks, we walk in the door, within 2 weeks, they're like, yes, I love it, let's get started. So typically, on the supply side, if it's a bank, it could take between 3 months and 1 year to get a deal out. And it's a painful slog. It's painful and it is hard, but we believe that when it is done, tend to be old once it's done, but it's a painful process. In fact, we think that is the moat around our business. Not a lot of people will have the patience for that kind of slog. Demand side, as you know, is a small ecosystem. Just because some of us have been in this space for long enough, we're almost on first name terms with everybody we need to have as customers. So we have a very lean sales effort. Myself, Yvonne, Ola, basically just hit people up, have a conversation and see how it goes. So demand side is probably easy for us. The supply side is the harder one.
And the moat you're talking about, can you just elaborate on that? So once you have done it, can someone else come and do it, or once you've done it, you pull up the drawbridge? That's it.
So once we've done it, the chances are high that someone else can also come and ask for it. You see, the hard part of the work is not in going into a bank and say, give me APIs. No, the hard part of the work is being able to go through that song and dance with the control guy, the compliance guy, the IT guy that the server doesn't work for. Not a lot of people have the patience for that. You have to have been in this industry long enough, know those bankers long enough to be able to weather that storm. Most startups can't do that. Most people just give it up.
So you're saying once you're in, then other people, you're actually making it easier for other people to come in.
Correct.
But
why
so
have multiple integrations when you can have one? Why go begging in Marina when I can do the begging for you?
Can I ask this question maybe in a slightly different way, Raj? Because I think you're getting it important. But I've talked to a good number now of sort of bank as a service and API driven, bank models in other parts of the world. one of the common problems they face is, you get, it's not so much competitors, but customers who dig around your moat. So they'll integrate with you because it's the fastest way to get launched and to get going. But, at some point they outgrow you to the extent that, whatever they're paying you per month, they could spend that in 1 month and do the integration themselves directly. And then, they end up just going directly to your suppliers. So how do you guys think about that? I've seen that a problem in a lot of other places, but how are you guys going to manage it in your business as it's a good problem to have, right? It just means your customers are growing and getting bigger, but it's going to be a big hit to lose those are going to be your biggest customers when you lose them.
So you're absolutely correct. Aside regulation, that's the next biggest risk to the business itself, which is your key customers. It probably won't even be everybody. It will be your key customers looking to save some cost somewhere. We think, let's go to the supplier directly. That risk is there. The way we think we'll mitigate it, even though it hasn't occurred yet, is that we will always be 2 or 3 moves ahead. So that customer that wants to leave us to do a direct integration will always find that we're a value add, whether it's from back channels to get back office support, whether it's from adding new layers of utility on top of what they have. We will always be 2 to 3 steps ahead of that customer. Why? It's our core business and it's not their core business. There's nothing you can do about that fact of life. So we will always be 2 to 3 moves ahead of them as long as we're committed to the cost. Why? It's our core business and it's not theirs.
Yeah. It may be related to how you would do that, because it requires a lot of agility. The way I think about it, your suppliers, they create this huge challenge up front, and it's definitely an issue I've seen over and over. Almost every company that I've worked with has had this problem, and I've actually seen companies fail, from waiting to get integration. So you're solving a good problem, but it feels to me like there's a pain that you can take for your customers, and there's some you can't, right? So there's the upfront stuff you can take, right? You plow through that, you go through it, and then everybody else who comes after you can benefit from what you've done. But the ongoing problems, because let's be honest, right? These are banks, maybe telcos, switches, it's not just the upfront problems that they create, it's the ongoing problems, service, reliability, responsiveness, changes in whatever weird soap bubble VPN they're using or whatever. So, how do you guys, is there any way to manage that and create a better experience for your customer, or is it just like you kind of have to pass those problems on some level?
So 2 ways. One of the principles we applied on OnePipe is that for every service, there will always be at least 2 suppliers, right? And because the interface is standard, we can easily toggle from one to the other without issues. So that's the second one. Is once you have been a partner to a bank or a supplier for long enough, and they're able to book some revenue, you're like their staff, right? Everybody's a WhatsApp message away. If there's a problem, you will always have a backdoor channel that the actual customer will not have, right? So we're like staff of the banks or switches or the partners. So those are the 2 main advantages that I see. Yeah. How to deal with that.
So you're saying sorry, let me just clarify. So you're saying because you build relationships with the people in the bank, you're going to have that relationship is your secret sauce, right? So that's what's going to stand you in good stead going forwards.
And the fact that our customers don't have to depend on just that one bank. If that one bank is proven to be a pain in the ass, then yes, feel free to switch to the next one. That's sort of how we see it. But at at midnight, there's a problem. A customer will probably have to raise a ticket with a bank, for instance. We will pick up the phone and call that IT guy, and he will wake up and at least explain what the problem is.
Okay.
Ope, you're very impressive and clearly really confident, and you know the space really well. I'd like to dig a little bit further on I guess the demand side of things. So if we think about your target customer, and it's a little bit of what Jake has talked about as well. If we think about your target customer, are you thinking about companies that are just starting and are looking to do their first integrations and are looking at you as a way to fast track that? Or do you think you're targeting sort of companies that already have a couple of integrations, but have hit a couple of walls and are frustrated and are switching over to you, I guess? I'm curious about how you're thinking about that.
So you actually make a very good point. It's one of the things that we are actually struggling with right now, right? at some point, we really wanted to show traction, as traction by any means, just to make this graph look nice. And then we went after, customers who already had a base. It was hard convincing those guys to come to an aggregator. But hey, whether it's through relationships, one or two things that look nice, or we're still able to get the graph to look up and to the right. So I think that going forward, that new fintechs or new people pursuing an opportunity to fill in this 10% will be better targets for us than the ones that are 2 or 3 years ahead of us, because it will take a bit of effort to convince those guys. The good part is that with time, as we start to add more integrations that make even more sense to the existing guys, like not a lot, for example, not a lot of companies can process payments directly from bank accounts in Nigeria right now. I don't know of any company that is a fintech that can 100% control a bank's bank account, right? So as we add more integrations, the complexity of what we are doing will look interesting to even the bigger fintechs, that they will look at us. But in the short term, to make our graph look positive, we can either just call up friends and say, use our APIs, please, while your brothers. Or we can go after the new fintechs and grow with them. But I think ultimately 18 months from now, 24 months from now, the infrastructure we are creating will be attractive to everyone. Even the banks themselves will connect to themselves to us.
Thanks. Cool.
All right, thanks. It's time for honest feedback and maybe some soft commitments. Investors, what do you think of OPE's business, OnePipe, and are you interested into pursuing further into due diligence?
Kian, can you go back to the ask page?
Yes, of course. OPE, please get back to the ask site. And meanwhile, the audience can answer the poll whether or not you're interested into investing as well. Investors?
Am I frozen? Oh.
No, they're taking the time to think.
I can hear the engines and the wallets shuffling. Bring out the money.
Ope, can you just tell me, just on the ask, I wasn't very clear what the ask is and what's available to the nest. Because on one hand, just help me with that.
We are raising a 350K round.
Right.
To be absolutely honest, we have soft commitments that have more or less filled the round. If we can get concrete commitments out of the nest now, then we close with that. Versus waiting for the soft commitments to turn to cash in the bank. But of the 350K round, what now? 200 is already gone as hard commitments, and the rest.
Okay, so there's 150 left.
Yeah.
Sorry,
but there's already a soft commitment on it, by the way. But it's just we can close fast. Okay.
And what's the instrument here? Is it
it's a convertible note on the 3.2.
It's a convertible loan note, right? It's what is it? What's the
convertible note on a 3.2 million cap?
The 3.2.
And when does it convert? What's the timeline?
2 years.
2
price round, as long as the price. Yeah.
2. Okay.
There's a potential that we'll have a price round towards the end of the year, as soon as we come out of the accelerator program. So
no, I like it. Okay.
Convert at that time. So
okay, I like it. As I think I've told you from before, I already looked at you for a while. I like it. I have a few other people who I've already mentioned this to, who are interested in it. So let's have a separate conversation offline. I mean, whoever else is interested on the nest, could tell the organizers, and I'll include them as well. But yeah, we can move quickly.
Here we go.
Maybe I'll go next. I like I said earlier, I think it's a great problem to try and solve, this sort of integration and connect fintechs and other developers to sort of core bank infrastructure, core bank capabilities. So big picture, I like it. I think it seems like you guys have done a lot to go around and integrate a lot of what's out there, or maybe low-hanging fruit, and you're starting to get real traction with people who pay money. So, you know, that's not easy to do. So congratulations on that. I guess, you know, where I'd want to get deeper to understand better would be some of the stuff we got into around how you manage the quality of service. You know, you have redundancy, 2 banks for every 1 service, but never underestimate the incompetency of banks. 2 might not be enough, right? Jokes aside, that's a really big issue with this kind of thing. And there's a lot of service stuff that has kind of state-like properties, i.e., you can't really switch between 2 banks, because if you're like issuing cards and processing them, or issuing bank accounts and some of the more challenging things, you can't switch around different banks for your customer, right? They've got to have all their cards or all their accounts in the same bank. So anyway, you know, a bunch of stuff that I'd want to get into that we don't have time for. But I'm really fascinated by it, and I definitely would be open to a follow-up conversation.
I would love to keep talking. Yeah, it's fine.
Yeah, if I can wrap up, Ope, a highly backable team, highly backable individual. Clearly, you know the space incredibly well, and I think one thing I've kind of walked away from is, you know, your consistent sort of energy towards delivering value, and like really listening, and like really pushing to, you know, figure out ways to, you know, create that value for your customers. So I think that can give you a big advantage. On my perspective, like I will definitely participate. My question would then be with Raj or with Hayden or whatever, but like we definitely would like to try and find a way to back you for sure. I think what you're building is really important.
My bank account is ready.
Here we go.
QR code up and right here, right?
Can we transfer
Well
you?
done. Well done. Congrats, Ope. So that's a wrap for today. 2 strong founders, high interest from the investors, and let's see the results of the poll. Yes, high interest from the audience as well. Thank you so much for tuning in. I will make the intros offline. Audience, thank you for being here every week. The Nest is weekly, every Thursday at 5 p.m. Lagos time. Until next time.